Welcome to Breaking News to Trading Moves. I'm your host. Today we're taking a look at some of the headlines moving through the wire and breaking them down into what really matters for investors. The winners and, of course, the losers in the market.
It's good to be here.
We have a pretty straightforward premise on this show. We're not here for the fluff or the drama. We are here to look at the facts. We look at the players involved and trying to understand where the capital is, where it's flowing. We have a lot to get through, so let's get right into it.
Yeah, the focus today is pretty tight. It's all aerospace and defense. We're looking at two specific stories that are really shaping the industrial landscape right now.
And these are pulled from the report on strategic horizons in aerospace and defense modernization. So let's lay them out. Story number one.
Story one is Boeing, specifically their big move to acquire Spirit AeroSystems.
Right.
And the news there is that it's just cleared a major regulatory hurdle with the FTC.
Okay, that's a big one. And story number two.
That takes us over to the defense side of the aisle. We're talking Northrop Grumman.
Okay.
Their Sentinel ICBM program is getting close to a really critical decision point, a point known as Milestone B.
Two big industrial stories. Okay, so before we start digging into the individual tickers and the nitty-gritty, how do you characterize the market environment when you see these two things happening at the same time? What's the tape telling you?
That's a good question. If you look at the tape right now, the way I would describe this is a production plus defense modernization environment.
Production plus defense modernization. Okay, let's break that down. What does that actually mean for an investor who's just looking at their screen?
It means we're really moving past the theoretical phase. I mean, for a long time, the whole narrative was about post-pandemic recovery or, on the defense side, future threats.
Right, it was all about what could happen.
Exactly. What could happen? Now it's about what is happening. It's about, cutting metal and execution. On the Boeing side, it is strictly about gaining control over its supply chain and its output trajectory.
So can they actually build the planes that they've already sold?
That is the multi-billion-dollar question. And then on the defense side, it's about multi-year budget execution. The contracts have been signed for a while now. The money's been allocated. Now they actually have to build the infrastructure.
So it's an execution market. That's the takeaway.
Precisely. It all comes down to who can deliver the hardware, who can actually build the thing.
All right, let's start with that first story then. The Boeing and Spirit AeroSystems deal. This has been in the works for a while now, but we just got a very specific news event you mentioned regarding the Federal Trade Commission. What exactly happened there?
So the FTC finalized what's called a consent order. And this effectively gives the green light for Boeing to buy back Spirit AeroSystems.
The company they spun off years ago.
The very same one. But, and this is a critical but, it is not an unconditional approval.
Okay, so there are strings attached.
There are, correct. The main condition is divestiture. The FTC is requiring that the parts of Spirit AeroSystems that serve Airbus, they had to be separated and sold off.
Which, that makes sense, right? I mean, Spirit builds these huge components, fuselages, for both Boeing and Airbus.
It does.
So if Boeing owns Spirit entirely, you'd basically have Boeing building critical parts for its only major competitor. That seems like a conflict.
It's a massive conflict, and that's exactly what the regulator is trying to prevent. They want to ensure there are competitive supply chains. They do not want Boeing having any insight into, or worse, control over, Airbus production rates or their pricing.
So the deal goes through, but only if the Airbus assets go somewhere else entirely.
Exactly. Find a new owner for that piece of the business, and the main deal can proceed.
So the deal is clearing the runway, so to speak. Let's talk about the market implication here. When you see this news, what are the core equity catalysts that we should be looking at?
For Boeing, this entire transaction, you can strip away all the noise. It is about one thing and one thing only.
And that is?
Regaining tighter control of fuselage and structural production. Full stop.
Because right now, the setup is just inefficient. Spirit builds the fuselage in Wichita, Kansas, puts it on a train, ships it all the way to Washington State.
And if there are any defects, any issues at all, the entire assembly line in Renton grinds to a halt. It creates this enormous log jam.
The huge bottleneck.
Creates bottlenecks. And you have to remember, when you have separate companies, you've got separate quality oversight systems, you have different management teams, and sometimes you even have conflicting financial incentives.
Right. Spirit wants to ship parts fast. Boeing wants perfect parts.
Precisely. So by bringing it all back in-house, Boeing is trying to eliminate those bottlenecks. They desperately want to improve what they call the delivery
The
cadence,
speed and the rhythm.
the speed and the rhythm at which they can hand over finished airplanes to the airlines.
And of course, improved quality oversight. That's probably the #1 reason.
That is the absolute mandate from the FAA, from customers, from everyone. So if the market starts to believe that this deal actually leads to fewer defects and a smoother production line, that's when it begins pricing in a more stable future for Boeing.
It takes away a big piece of the uncertainty.
It removes that vendor risk element from their most critical structure.
All right, let's move to the winners then. Breaking this down, we are looking specifically at aerospace manufacturing and supply chain stabilization. So who are the most direct beneficiaries here?
Well, you obviously have to start with the two main parties involved in the deal itself.
Makes sense. Let's get the tickers straight for everyone. First up, obviously, Boeing. The ticker is BA.
BA. They're the acquirer. They're the ones putting up the capital to regain that control. So for the market, this is seen as a necessary, if expensive, step to fixing their factory floor problems.
And then the target of the acquisition, Spirit AeroSystems, that ticker is SPR.
SPR. And they are, of course, central to this whole production fix. For shareholders of SPR, this is really the end of the acquisition story. But operationally, they're the ones who are about to be integrated back into the mothership.
Okay, now, this is where we have to look a little deeper. You used the word stabilization earlier, and that stabilization doesn't just help Boeing, right? It should, in theory, help the entire ecosystem around them.
Oh, absolutely. Correct. You have to think of an aircraft factory like a finely tuned clock. It's a series of incredibly complex, dependent steps.
And the fuselage is the mainspring.
It really is. If that fuselage arrives late, or if it has defects that need to be fixed on the line, the whole clock stops. And that hurts every single other supplier who's waiting down the line to install their parts. The engines, the avionics, the seats, everything.
So if Boeing can stabilize that first huge step, then all the other suppliers benefit just from having a predictable schedule again.
A predictable schedule is gold in this industry.
So who are we looking at in that broader ecosystem? Who gets a lift from this?
Two names come up very frequently in this specific context. The first is AAC, and the second is TransDigm Group.
Okay, let's get the tickers. AAIO is HEI.
HEI.
And TransDigm Group is TDG.
TDG.
So why them? Why specifically these two companies? What do they do?
They're both major suppliers of a huge range of aerospace components, replacement parts, subsystems, highly engineered little bits and pieces that go into everything. They run very efficient, very high-margin businesses.
And what do they hate more than anything?
Uncertainty. They hate stop-start production. It wreaks havoc on their planning. So as the supply chain stabilizes and those big bottlenecks at the fuselage level start to reduce, AAKC and TransDigm benefit directly from a more predictable production environment.
They can manage their inventory better, their workforce, all of it.
All of it. Stability equals efficiency for companies like that. It flows right to their bottom line.
Got it. Okay, there is another layer to this winners category that we've mapped out. We're talking about aerospace materials and then the engine and aftermarket beneficiaries.
This is what I call the volume play.
The volume play. Explain what you mean by that.
Okay, so if you accept the premise that Boeing buying Spirit leads to a stable production line, what's the next logical step?
They start building more planes?
Eventually, yes. Delivery rates start to trend up. And even if it's a very gradual increase, a few more planes a month, that has a direct effect. More planes being built means you need more raw materials, more aluminum, more titanium, and you need more engines.
Okay, so who are the key players in that part of the chain?
First, I'd look at the materials side. A company called Howmet Aerospace.
Howmet, ticker is HWM.
HWM. They are a massive player in things like engine products, fastening systems, the high-tech nuts and bolts that hold the plane together.
Yeah.
But critically, they make the advanced metal parts that go into the turbines and the airframes.
So if build rates go up?
Demand for their titanium and their advanced alloy products goes up in lockstep. It's a very direct correlation.
And then on the propulsion side, the engine makers.
The big one here is GE Aerospace.
Ticker GE.
GE. Simple logic. You can't deliver a glider to an airline. Every single time a 737 or a 787 rolls out the door, GE is shipping more engines. It's an immediate, high-value revenue event for them.
Plus the long tail of service contracts.
Plus the very, very profitable long-tail revenue of servicing those engines for the next 20 or 30 years. That's where the real money is made.
And finally, you have Honeywell on this list.
Honeywell, yes.
Ticker is HON.
HON. And they provide so much of the guts of the plane. Avionics, mechanical systems, power systems. It's really the same logic as the others.
Higher build rates mean more orders for them.
Higher build rates correlate directly to the bottom line for all of these key component suppliers.
So just to sum up the logic chain here for the commercial side, Boeing buys Spirit, that helps stabilize production, which allows build rates to gradually increase, and as a result, suppliers like Howmet, GE, and Honeywell sell more units.
That is the bull case. That's the entire investment thesis the market is looking at right now.
All right, let's pivot. We're going to move from the factory floor in Wichita and Seattle to the strategic defense sector. We need to talk about the Northrop Grumman Sentinel program.
Yeah, this is a complete shift in focus over to the defense sector, and specifically we're talking about nuclear modernization.
A topic that's getting a lot more attention lately. What is the specific news event here? What's happening with Sentinel?
So the program itself is the Sentinel ICBM. This is the massive long-term program that is intended to replace the entire fleet of aging Minuteman III missiles.
The ones that have been in the silos since the 1970s.
Exactly. I mean, it is a monumental undertaking. The news is that the program is heading toward a really pivotal gonna-go step.
And you said that step is called Milestone B?
Correct. Milestone B. And the expectation is that this decision will be made by the end of the year.
Okay, so what is Milestone B in government contracting terms? Why is it so important?
In government speak, Milestone B is usually the decision point where a program officially moves out of prototyping and into the engineering and manufacturing development phase. It's the point where the really big capital gets committed for the long haul.
It sounds like the point of no return.
That's a very good way to think about it. Effectively, yes. Once a program gets past Milestone B, it's very, very hard to kill. And we're seeing tangible progress markers that suggest it's on track.
Like what?
Well, there's a test launch planned, which is a big public sign of progress. And maybe more importantly, there is a prototype silo project that's already underway in Utah.
A prototype silo. They're actually digging holes in the ground.
Yes, they're actually moving dirt. And you have to remember, Sentinel isn't just a new missile. It's a whole new infrastructure. They have to upgrade hundreds of silos, the launch control centers, all the communication networks. Seeing a physical silo project starting is a very real signal that this program is moving forward.
So why does this matter so much for the market? Why is Milestone B such a focal point for the equity story here?
Because Sentinel is what we call a multi-year budget and execution story.
Okay, what do you mean by that phrase?
It means this isn't a one-off sale, like selling a few fighter jets. This is a program that is going to run for decades. It's going to employ thousands of people and consume billions of dollars a year for a very long time.
So it provides a very long runway of predictable revenue.
Exactly. And it influences the broader sector because it locks in that funding, not just for the prime contractor, but for all the missile and propulsion suppliers underneath them. It's really about giving the market confidence in the long cycle of U.S. strategic defense spending.
So if the government officially commits to Milestone B, they are essentially committing to writing checks for this program for the next 20 years.
That's it. It validates the backlog. It makes future earnings much more visible.
Okay, let's look at the winners here then. We've categorized this group as defense primes tied to nuclear modernization and missile systems.
Right. And you can think of this as the flagship effect. Sentinel is a flagship modernization program. So any progress it makes supports the confidence that the big primes, the main contractors, have a very durable, long-term backlog of work.
Let's run through the tickers then. Obviously, the lead horse in this race is Northrop Grumman.
Northrop Grumman. The ticker is NOC.
NOC.
They are the primary contractor for Sentinel. This is their program to win or lose. So that Milestone B decision is the single biggest catalyst for their stock specifically.
But we also see other big primes in this basket. For example, Lockheed Martin.
Lockheed Martin, ticker LMT.
LMT. And also General Dynamics.
General Dynamics, ticker GD.
GD. And last, RTX.
RTX, which used to be Raytheon, ticker's RTX.
So the question is, why are LMT, GD, and RTX included here if Northrop is the prime contractor on Sentinel?
Because they are all indispensable parts of the broader ecosystem of strategic defense. Think about the nuclear triad.
Land, sea, and air.
Exactly. General Dynamics builds the submarines that carry the sea-launched nuclear missiles. Lockheed and RTX are both heavily involved in missile defense, advanced propulsion systems, guidance systems, all the tech that surrounds a program like this.
So the thinking is that a major commitment to the land-based leg of the triad signals a commitment to the whole thing.
It absolutely does. When the government signals that it's this serious about nuclear modernization, which Sentinel clearly represents, it lifts the valuation logic for all of them.
Right.
It confirms that the threat environment, as they call it, requires massive, sustained spending across the entire triad.
It's a rising tide for the nuclear triad primes.
Precisely. A very big, very well-funded tide.
All right, we've covered the winners, the companies benefiting from stabilizing supply chains on one hand and long-term government contracts on the other. Now we have to look at the other side of the trade, the losers, the risks, the downside.
And this is where that production tape gets really tricky. Because until that stabilization we talked about actually happens, there's a lot of pain in the system.
Let's start with the most obvious group, the airlines. These are the companies directly exposed to delivery uncertainty.
This is, at its core, a capacity problem for them.
Right. Even with the Boeing and Spirit approvals, that integration is going to take time. You don't just flip a switch on day one and the factory works perfectly.
Well, not at all. The production ramp risk remains very, very present. The consensus among experts is that delivery schedules for new aircraft are likely to remain choppy for quite some time.
What does choppy actually mean for an airline's operations? What does that feel like?
It means you simply don't know with any certainty when your new plane is arriving. And that creates havoc for capacity planning. Airlines build their flight schedules months, sometimes a year, in advance. They hire pilots for those planes. They start selling tickets for those seats.
And if a plane isn't there?
If the plane isn't there on the day it was promised, they have to scramble. They either have to cancel flights, which makes customers furious, or they have to keep flying older, less fuel-efficient planes for longer than they wanted to.
Which hits their unit costs pretty hard.
It completely messes up their unit cost assumptions. You're suddenly paying pilots to sit around because a plane isn't there, or you're burning way more fuel on an old jet you were planning to retire. It also hinders their route expansion plans.
Can't launch that new route to Tokyo if you don't have the new wide-body jet to fly it.
You absolutely cannot. So who are the specific names that are facing this headwind right now?
Let's list them out. United Airlines.
United, ticker UAL.
UAL. They have significant exposure to Boeing deliveries. Then there's Delta Airlines.
Delta, ticker DAL.
DAL. And finally, American Airlines.
American, ticker AAL.
AAL.
All three of the big U.S. legacy carriers are in a position where they desperately need new metal to modernize their fleets and control their costs. So any delay in that production tape is a direct hit to their efficiency and their growth plans.
Okay, the next category of losers is very closely related to the airlines. We're talking about aircraft leasing and fleet financing companies.
These are the middlemen of the industry. They're the big landlords of the sky. They buy huge numbers of planes directly from Boeing and Airbus and then lease them out to airlines.
So why are they on the losing end of this?
Because their business model is incredibly sensitive to delivery timing. Lessors can get whipsawed by these production pushouts.
Whipsawed. Explain that.
Okay, imagine you're a lessor. You have a signed contract to lease a brand new 737 to an airline, and that lease starts on June 1st. Your entire financial model for that asset is based on that date.
You're expecting revenue to start coming in.
Right. You expect the plane from the factory in May. But then the factory calls and says, sorry, there's a delay. It's coming in December now. All of a sudden, you have a huge gap. You have delayed lease starts. That's 6 months of revenue you were counting on that has just vanished.
And I imagine the airline on the other end might want to renegotiate the terms if the plane is that late.
Of course they do. It creates a domino effect. It forces them to reprice contracts. It alters their own purchase plans. If these delivery timelines stay uneven and unpredictable, then near-term visibility for these leasing companies is a major headwind. Their whole business thrives on predictability, and right now, they just don't have it.
And who are the big public tickers here?
The two big ones are Air Lease,
Ticker AL.
AL, and the other giant is AerCap Holdings,
AerCap, ticker AER.
AER. Both are massive players in this space, but their fortunes are directly tied to the OEMs, to Boeing and Airbus, delivering planes on time.
Okay, finally, let's look at the defense side for our losers. We talked about the primes being winners, but you mentioned there's a nuance here, something about execution risk.
Yes. The other side of the coin for defense contractors is facing an execution risk premium.
Explain that concept. What is an execution risk premium?
Well, when you have these huge high-profile programs like Sentinel or the B-21 bomber or others that experience delays or significant cost overruns, it attracts a lot of unwanted scrutiny.
Politicians in Washington start holding hearings, asking tough questions.
Exactly. Auditors from the GAO get involved. The media starts writing negative stories. And of course, investors get very, very nervous.
So they start looking at everything under a microscope.
They start focusing intensely on the contract structure.
Hmm.
Is this a firm, fixed-price contract where the company has to eat all the overruns? Or is it a cost-plus contract where the taxpayer foots the bill? They look at margins, at oversight, and all of this leads to what the market calls an execution risk discount being applied to that company's stock, and sometimes to adjacent programs or even other companies that have stumbled recently.
So even if the government budget is there, if the market loses faith in your ability to execute on that budget, your stock suffers.
That's it exactly. Performance matters.
So who are the names that have been highlighted in this context?
Two examples would be Science Applications International,
Okay, the ticker there is SAIC.
SAIC, and another is Leidos Holdings,
Leidos, ticker LDOS.
LDOS. Now, these are more on the service and solutions provider side of defense. They operate in a very competitive environment. So if overall scrutiny on defense spending efficiency rises because of overruns on big hardware programs, these are the types of companies that often face tighter margin pressure and more intense contract reviews.
So we've laid out the entire landscape. On one side, you have Boeing trying to fix its factory. You have Northrop trying to build a new generation of silos. On the other side, you have airlines just waiting for their planes. And all the while, investors are watching the execution very, very closely.
That is the board. That's the state of play.
Let's boil this all down now.
Yep.
We promised tradable takeaways. For our listeners, what are the specific things they should be watching? What are the signposts?
Okay, I think there are three key watches that come out of this.
All right, takeaway number one.
On Boeing and Spirit, watch the headlines about the deal conditions plus divestiture. The deal isn't closed until it's actually closed. But once it does close, my advice is to stop looking at the deal itself and start looking at the factory floor.
The operational metrics.
Yes. Track any and all commentary on delivery rates. Look for updates on supplier quality. Is it getting better? That is the metric that will ultimately move the stock, not the deal closing itself.
Okay, makes sense. What's takeaway number two?
That's on Northrop and the Sentinel program. The thing to watch there is the path to Milestone B. Look for any news, any whispers about schedule clarity. For Northrop, this is as much about execution credibility as it is about the budget.
It's a test for the management team.
It's a huge test.
Yeah.
If they hit that milestone on time and on budget, it validates the management team in the eyes of the market. If they slip, that execution discount we talked about comes right back into play.
Got it. And takeaway number three.
The third one is about the second-order effects, the other companies. First, watch the parts and material stocks, so HWM, GE, HON. They will likely move on any hint of better build rate visibility out of Boeing. If Boeing comes out and says, we are confident we can speed up the line next quarter, those stocks could move first.
And the flip side.
Conversely, the airlines and the lessors, UAL, AL, and the others, they will react to confidence or lack of confidence in the delivery schedules. If the schedule slips again, you can expect them to trade down.
It all comes back to the physical delivery of the asset. Can you build it and can you deliver it on time?
In the industrial world, it always does.
We've covered a lot of ground, from the FTC's offices in D.C. to the Utah desert, from high-tech titanium fasteners to airline flight schedules.
The market is a complex machine, a lot of moving parts.
Indeed. Before we sign off, we do need to handle the necessary housekeeping.
All right, the disclaimer.
This is not financial advice. It is not a buy or sell recommendation on any of the tickers we discussed. This is purely the opinion of the author. You have to do your own due diligence.
Absolutely, always.
Thanks for listening to Breaking News to Trading Moves. Keep your eyes on the tape.
See you next time.